What's up everyone, hope you're doing well. If you haven't watched the interview last week, we have a new course at Desire Trade. Someone's going to come in and help our students, do some content on YouTube as well. His name is Kevin Hunt. I posted last week a whole interview with him, going over his story and a bit of what he does. Now, I just finished recording a video about how he was able to move away from the UK and start his life as a full-time trader in Thailand. It's a cool story and you kind of see the behind the scenes of how he's been able to do it. So I hope you like it. Definitely some good stuff there and you'll learn a lot from him and how he's been able to do it. So jump right into the video and I'll catch back here at the end.
2010, I went from being a successful entrepreneur and business owner to losing everything. 2012, I met my now wife on a flight heading into Heathrow, London. 2014, I discovered Forex trading. 2015, I became a consistent and profitable trader. 2017, we decided that we wanted to relocate to Thailand. 2019, mission accomplished. And here I am, living as a trader, full-time in this beautiful country, Thailand. Hi everyone, and welcome to the Desire to Trade channel. If you're serious about becoming a successful trader, be sure to subscribe. You'll become a part of this amazing community and you'll get heads up as and when new material is posted. Now, listening to that timeline in the intro makes my journey seem like a breeze. So easy, but needless to say, it wasn't that straightforward. The main aspect of bringing that together meant that I needed to become a successful Forex trader. I want to share with you what I consider to be the 5 most important pieces of the puzzle in becoming a Forex trader. So the first on my list is strategy. So where to start? When I first started, I believed that I could sit down, I could look at charts and I could work out a way of getting in and getting out and taking profits from the market. And of course, without knowing what I was doing, it was madness, absolute madness. So then what I started to do was look around and do some research online, find people who were teaching, some different mentors, some different coaches, and different strategies. Now there's 1,000,001 different strategies out there, many of which are successful, but just as many, maybe more, that are not. So you need to be very, very careful when choosing the strategy. The other thing to contemplate, the other thing to consider is when you're looking at a strategy, you need it to fit in with your life. If you've got a 9-to-5 job and the strategy that you look at, it entails being in front of the charts at a certain time, that you can't make it. You're going to be there at work. You can't do that. So, like I say, there are so many different strategies out there that you will find one that fits in with your life. You see, first of all, when you come into trading, you're not just going to be able to stop work, start trading, and making money from it immediately. So what you have to do is try and combine it with your work life, with your income, where you're getting your income from at the moment. And one of the good things about Desire to Trade is that they have many different strategies, tried and tested strategies that will fit in with many different lifestyles, different ways of trading it, different amounts of time actually spent working on it. So there's something for everyone there, but that's the most important thing to consider initially. What's the point of wasting your time on a strategy when you can't actually spend time implementing that strategy? So that's the first thing that I needed to do. I needed to find something that I could fit in with what I was doing. Then, of course, once you found that strategy, you need to find someone who can teach you how to trade that strategy. And believe me, I was one of those, I thought I would save money. What's the point of spending money when I can sit down and work this out myself? And it was a waste of money. Even though I wasn't spending on a mentor or a coach, I was just blowing money in accounts. And it's worth investing in your education. It's like any kind of education. You invest in it, you invest time in it, you invest finances in it, and come out of the other end with something that you can actually implement and use to your advantage. Point number 2 is risk management. Now, a very, very important part of being able to hold on to your money, your capital, and to ensure that that capital grows over time is risk management. Some people, they'll get involved, they'll go straight in there, they'll over leverage, and they'll be looking at placing a position that is way over and above what they should be doing. It's great if you're lucky and things work out okay. And listen, it doesn't matter how long you're trading for, it doesn't matter how much experience you've got, you have to be very, very particular and very precise on your risk management. You're going to take stops. You could be 5 years, 10 years, 50 years as a trader, and you could be one of the best traders in the world. but I guarantee you that you will still have losing positions. And to compensate for that, you need to make sure that your risk is at a level that you can absorb that loss, that you're not going to blow an account. And again, it was something that I did. I look back on it now and it's kind of strange. It's like, why didn't I do this? Why didn't I do that? But so many of us go through it. Believe me, we do. We'll have a few losing trades. And then I'll start to look at the risk management and think, well, okay, this looks like a pretty good setup. I'll over leverage a little bit. I'll go a little bit more than what I should do. And then you lose. And then you make that stupid mistake of going a little bit more and a little bit more. It's not the way forward, it really isn't. And that just drains you, absolutely drains you, as well as your balance, your capital balance. So risk management is very, very important. Me personally, any position that I take when I'm trading, I risk 1% of my capital. Meaning that if I have a losing position, I'll lose just 1% of my capital, and then that's very easy to come back from. If I have a run of bad luck, and things don't work out as I wanted them to or expected them to, I'll sometimes pull back to 0.5%. Now, some people will think, okay, if you're risking 1%, and you lose 5 trades, 10 trades, and then you suddenly cut back to 0.5%, of course, by cutting back with your lot size, you're also cutting back on the potential profit that you'll take from any position. It will take you longer to get back to that level where you were. I won't say break even, but coming back to where you started your losses. So, of course, you cut your lot size and it makes it a little bit more difficult. It makes it a little bit of a longer drag to get back to where you were. But believe me, by doing that, cutting back from 1% loss back to 0.5% loss made a massive difference to me. Instead of beating myself up and having the anguish and the anger sometimes of losing 1%, pulling back to 0.5%, you, at the end of the week, you look at the monetary value and you think, not so bad at all. It makes it much easier for you to get back into a positive way of trading. And that positivity is so important. We'll get to that a little bit later on. But it'll get you back on an even keel, and it will allow you to trade to the method, let's say, without breaking the rules to try and get you back to where you should be. So that's risk management out of the way. Very important point, as are all of these, or they were for me anyway. Point number 3, it's a lot of people, and again, I was one of them. When I'm talking about a lot of people, please include me in that group, because I did all of this myself, and going through it is what brought me out the other end and sticking with it to become successful eventually. But for me, sometimes I just don't listen to people, and it's a very bad trait that I've got. If someone could have convinced me to follow these 5 points that I'm pointing out to you now, it would have made the journey a lot quicker and a lot easier and less expensive as well. I'd have had much more capital earlier on. But number 3, it's about jumping from strategy to strategy. Now, start off, find a strategy, as I said, that suits your lifestyle, that suits your means regarding time and capital. So you'll focus on something that will work okay with you and your lifestyle. Once you do that, master it. Get it off so it's perfect, and you're trading it consistent. Then what you can do is start to incorporate another strategy. Now, some people will think, well, why? Why would I do that? The thing is, the markets are ever changing, ever moving. When I started, I would say London session was outperforming New York session, and that changed. I'd say for the last 2, maybe 3 years, the New York session has been showing better daily averages, which is what I need for my day trading, to be able to pull profits from it. So the bigger daily average is on the New York session now. Not every day, but a vast majority of the time, as opposed to what London's doing. So London used to be up there, it was the big boy, and then New York session overtook that. So you need to be in a position where you can switch over to another method maybe, or another strategy. The other thing with bringing in another strategy is the fact that our lives change. Some people who are working today might work those hours each day. Suddenly they lose that job. They still need that income because they're not generating enough from trading. They'll go to something else that puts them in a different time zone for their work life, and then find that the strategy they were working with doesn't work. So what I would recommend, sure, take on board a few different strategies, but at the same time, be sure to master one at a time. Don't keep flitting between different strategies while you're learning. Learn one, master it. learn another, master it. And another reason why this works so well for me is because the lifestyle I've got now living here in Thailand, we're here at home at the moment. This is my home office. Let me think. A week's time, 2 weeks' time, I think we're off to some little resort somewhere up in the mountains. And I'm going to be doing things with family and friends. And that way I can change the strategy that I'm trading with and still bring income in. So I'm still earning money. And it saves me just saying, right, I can't work for that period of time. I'll take it off completely. If I get time and if I want to, I can then switch over to another strategy and I can use that to carry on trading and generating income for myself. So however tempting it is, in the beginning, try not to keep flitting between strategies. Learn one, master it, and then move on to another one and another one. You can have 10 strategies under your belt and you decide which one suits you at that moment in time, the way you're living, what you're doing, that kind of thing. Point number 4, I see trading as a continuous education. I don't think I'll ever get to the day where I think, that's it, I know it all. No need for me to research, to look into things. I've got a genuine interest in trading and other traders. I love speaking to other traders, hearing their stories, hearing what's working for them, seeing how some of them are beating themselves up because things are not working quite well for them. And we can swap ideas and knowledge and experience and help each other out. And for me, that's a big part of trading, helping other people out, passing on a bit of knowledge that I know. And at the same time, without even knowing it, those people are passing on information and knowledge to me. And it really does help in that journey. It's a very, it's a very special community, I think. And you get to meet people who are doing something similar to you, even if they're trading a completely different strategy and a different asset. You've still got this common bond. And it's kind of like a camaraderie thing, you're working together, you're trying to do this, you're trying to beat it. Like I say, I'll never ever stop learning. I'll always be learning from other people and what the markets are doing at any given time. It can change at any time. And last but not least, point number 5. And you'll have heard this a million times before, but most people don't really take it that serious. Maybe because they hear it so much, it's like, yeah, again. And that is mindset, the psychological element of trading. And I can't emphasize how important this is. I can't emphasize enough how important it is. And this is a part of that continuation of learning. I'm constantly working on my mindset. Something can happen today in the soil where I live, the little street where I live, with family, with situations, circumstances with friends back in England. And that can throw you, that's working on your mind, and that can affect your trading. Especially when you start out, mindset is the most difficult thing to grasp, to take on board, and to understand how you need to control it. Now, you've got a set of rules. Someone says, if the chart does this, you do that. You put your stop loss in, you put your take profit in, and then it does that. Hopefully, you'll take profit. And it doesn't. When you're working with a demo account, it's not so bad. Sometimes, even a demo account, it can become so frustrating because that achievement that you're aiming for is not happening. So what you'll find happening is that you'll be going off kilter. You'll start to bend and break the rules. That's down to mindset. Earlier on, we mentioned risk management. Risk management, it really is quite simple. The fact that you have a strategy and you work with certain numbers, calculations to know exactly how much you should risk. Once mindset starts to dig into that can just go out the window. That's when you start over leveraging, when you start over trading, taking too many positions, accepting too much loss, and it just wears you down eventually. It wears you down. That mindset thing has got to be the strongest part of your trading strategy, your trading method, and your being. And this is that thing. I don't think I'll ever understand the way that my mind works completely. I'm sort of like getting it more under control. Listen, let me tell you, I come from Southeast London. Southeast London, most young guys growing up there are a little hot-headed, and accepting when you're wrong can be quite difficult for most people. But you've got to accept in trading that it's a probability. If anyone tells you they know what the markets are going to do from 1 minute to the next, run a mile, get away from them. No one knows what's going to happen. What we're doing is we're working with probability and nothing more. We're not clairvoyants. We don't have a crystal ball. And we don't know what euro US dollar is going to do, the pound Japanese yen, or any other asset. We haven't got a clue what they're going to do in the future. But we look at our charts, we look at our strategy, and we work with probability. And that's what you're working with. Probability isn't a defining fact, and you need to understand that. So you have to accept, you take a position, you get stopped out. Your risk management will take care of that over a period of trades. Many people who talk about trading put the figure of 80% on the importance of mindset. They say that in the overall picture of trading, 80% of becoming successful is down to mindset or psychology. Now, I don't know the exact figure, but I'd put it up there somewhere, as much as that, I really would. One of the things that seemed to work for me specifically was reining in my expectations. So, don't expect too much. When you're trading, don't expect that new Ferrari in a month's time or a year's time. Don't think along those lines at all. Start small with small capital and gradually increase. Don't be tempted. Listen, if you're trading with a $5,000 account to get you up to speed, to learn how to trade, and then you're doing okay for a while, and you suddenly jump up to 50,000, 100,000, believe me, that will throw your mindset and your psychology out. You get one stop, two stops, and it's a completely different ball game that you're playing then. So you need to do these increases in your capital. You need to do it gradually. Don't do it as a big jump. Something that I did, I blew up 2 accounts by trying to jump too quickly. Looking at the money that I'd lost in the past, I'm thinking, I've got to get there quick. This is working for me. I'd whack in another big chunk of capital, suddenly take a few stops and thinking, oh, no, I can't deal with this. And it just threw me and just put me back to the beginning almost. So be sure to build your capital slowly, gradually, and get used to the effects of the losses. But not just the losses, the wins. You start winning and you're on bigger capital and your gains are coming in bigger, you suddenly become the best trader in the world. Believe me, you start to honestly believe the madness that you're some kind of genius. And that can be as bad as being down in the dumps and losing. Don't get in that position where you experience euphoria as if you're some kind of genius. That will throw your trading right out the window, because then you'll think you're untouchable. You are still touchable, believe me, and you'll come crashing down. Another part of this mindset thing was when I was talking to people about how I was doing, how my trading was going, it's surprising how people's comments can knock you down and put you right down, really put you down in the dumps. So to start with, I was working with small capital, and someone would say to me, well, how are you doing? And I'd say, I made $100 this week. And they'd laugh. I thought your expectations was moving to Thailand, even on $100. That's going to be a bit tight, isn't it? And it suddenly puts you down the dumps. It's like, someone pulling the rug from under your feet, and it's not very nice at all. What I did, I started talking in percentages instead of dollar or pound amounts. So someone would say to me, how's your trading going? How you doing? How did you do this week? I'd tell them, I've made 7% this week. And they'd be like blown away. Incredible. That same person, if you told them you was earning 7% of $1,000, they'd laugh at you. You just tell them you've made 7% on your capital. Don't tell them what your capital is. You've made 7% on your capital this week. They'll be ready to start throwing money at you. They'll want you to invest their money for them. And so just a simple terminology, a simple change in terminology. Don't talk about pounds, don't talk about dollars, talk about percentages. And even on small amounts, you'll suddenly be getting praise from so many different people, and it'll put you on a different plane. You'll feel successful. You'll feel like you've really achieved something. The percentages are what you should really be looking at rather than the dollar value, because you could be held back with a small amount of capital. And if you can keep your mindset right, if you can do 7% on $1,000, there's nothing stopping you doing 7% on $50,000, $100,000. But the mindset is the thing that will glue it all together. It's the mindset that will hold it all together. So don't forget that. The mindset, the psychological element, however many times you hear it, you'll get to a point where you want to dismiss it. Please don't. Keep working on it. Keep focused on it, because it's that will hold everything together for you. So that's it. That's the 5 key points that I could come up with that I think led me towards being successful as a Forex trader and managing to realise my dream of living here in Thailand full time. One thing I will say about trading before I go is that something that I absolutely adore, I absolutely love about trading, is that it's a level playing field. My background growing up in southeast London, so many things were not on a level playing field. There was always something working against you, some kind of struggle where you needed to be a certain person, a certain wealth level, in a certain group of people to be able to succeed. That was blocked from so many people. Trading is not blocked from anyone. As long as you can get your head around it, as long as you can work with a good strategy and stay focused and stay disciplined, anyone from any walk of life can succeed as a trader. I mean anyone. There's no nepotism involved in trading. Doesn't matter how wealthy you are or how poor you are. Doesn't matter what your race, religion is. You can sit down and if you can get your head around it, work with a good strategy, stay focused, stay disciplined, you can be a successful trader. I'd like to see every one of you who are watching this video succeed as a trader. But ultimately, you know that success is going to be down to you, the individual. Accept that and work with it. And whatever you do, don't let anyone put you off. Don't hesitate, get involved and start working on it today.
So I hope you like this video from Kevin. There's going to be more on the channel coming soon. If you want to see more, make sure you like this video and subscribe to see more videos like this. We always publish 3 videos a week. 1 interview and 2 videos in the week about trading from myself or from the guys from the Desire Trade team. So you'll be seeing a lot more content. And I'll catch you back here in the next video pretty soon. Ciao.